Title: You don't buy yield, you buy escape velocity. Flint West reporting. You ever notice how nobody really buys a stock? They buy a story about time. That's what valuation really is. A bet on how long the future is going to keep showing up. See, Wall Street dresses it up in math. They say PE ratio's 30. Sounds smart, but what that really means is you're paying 30 years worth of faith up front. You're saying, here, take my $100 now and promise me $3 a year until we're even. And you call that investment. But the yield, that's the truth hiding under the lipstick. Flip that PE upside down and it tells you what the market really thinks your time is worth. PE 30, that's a 3.3% yield. PE 50, that's 2%. And if you're waiting 50 years to get your money back, partner, you're not investing, you're praying. Now don't get me wrong, belief moves markets. But belief without math, that's not valuation, that's worship. And the altar these days is built on forward guidance, stock buybacks, and a Fed that's too scared to tell the truth about time. You see, the PE ratio is a mirror, not a metric. It reflects how much the crowd's willing to pay for a dream. Sometimes that dream pays off. Sometimes it takes a generation. And sometimes, like now, the dream's already priced in and the clock's still ticking. So here's the question I ask myself. If every stock is just a claim on future time, what happens when the future stops compounding faster than reality can deliver? That's when you learn the difference between buying yield and buying hope. And that's when the real investors walk out quietly, because they know you don't buy stocks, you buy time. And time's the one thing you never really own. But here's the twist. Even the clock's rigged. Because if the currency itself is melting, then yield becomes an illusion. Your 3% doesn't mean a damn thing if the dollar loses 4%. That's not yield. That's slow theft with interest. The same lie lives in bonds. They call treasuries risk-free, but that's only true if you ignore the part where your purchasing power evaporates. Look at that chart. TLT from $170 down to $91. The so-called safest asset in the world just saw half its face melt off. That's not safety. That's a time prison. Hold to maturity, they say. 20 years of coupon crumbs while inflation eats your lunch. You'll get your principal back, sure, but it'll buy half as much house, half as much land, half as much life. That's not security. That's duration decay, a tax on your time. So what do investors do? They start hunting. They look for the fastest horse, the asset that can outrun both duration and debasement, something that compounds faster than the system can erode it. It's not greed, it's survival. You're not trying to beat the market anymore. You're trying to beat time's inflation rate. Every investor's secretly in the same race, the race for escape velocity, the speed where your wealth breaks free from the gravity of melting money. That's why Bitcoin, gold, tech stocks, real estate, whatever your pick, all share the same logic. They're not just assets, they're escape crafts. Some are fast, some are fragile, but they're all built for one mission: to get you off a sinking planet of yield illusions. Because once you understand that every safe return is just a delayed loss, you stop worshiping yield and start chasing acceleration. And maybe that's the new truth of markets. We're not investors anymore. We're pilots, and only the fastest horse wins. Flint West, you don't buy yield, you buy escape velocity.